Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello everyone, feel it's appropriate to begin recording with sirens in the background. That's the kind of day we had today. So, a huge dump day. What stood out very early on, thanks to some members in the group posting, was a big volume day. The huge volume indicated that this is more than just a pullback at this moment, and it is an all-out dump. Now, looking at the longer-term time frames, it is normal, healthy consolidation. Obviously, it's very magnified here, and we know stairs steps up, elevator down. We just wiped out pretty much 2 months of gains, slow and steady to the upside in one day. So the gap down open, the high of the day rejecting from the 10-day moving average resistance. The close at the low of the day is what stands out to me. And I went back and looked historically over the past year or two of big dump days and the candlesticks. The vast majority of them have some form of lower wick showing the bulls buying the dip. And the ones that didn't led to gap downs the next day. So just looking at previous price history alone, I would say it is more likely than not that we do see a gap down on Tuesday. But then I look at the hourly RSI of SPY and I see it at 6. And I think to myself, how can we possibly gap down with an RSI on the hourly chart at 6? So that remains to be seen. We'll have to see what the pre-market setup is. We'll see if maybe after hours and pre-market the RSI cools off a little bit. But just looking at previous price history alone, this is the kind of candlestick and volume where we see a multiple day huge dump with gap downs. I'm not saying that's going to happen again, but that's just something to be aware of. So where are we going to look for support from here? First support I'm going to be looking at is the 100-day moving average, 211.59, and that's a very key level, 211.59 on the daily. Look at the weekly. So I'm putting these Fibonacci retracements from the low of the Brexit dump, and I'm putting them at the all-time high. We haven't even hit the first level, the 38.2% mark. That level is 218.55. The middle Bollinger Band weekly support, 211.58. So we have the 100-day moving average, the weekly middle Bollinger Band, and the Fib retracement level all lining up in the mid-211s. Definitely worth keeping an eye on those levels. We're looking at a bearish MACD cross here, very close to following through. We have not had one of those in 2016. Absolutely, that stands out. But just in terms of perspective, this consolidation never occurred after the Brexit bounce. We just went straight up for 2+ months, and we had a little bit of consolidation leading up into this dump. But this is now, we're going to be watching this Fib retracement levels because, again, if we form a higher low anywhere above the low of the Brexit dump, the longer-term trend is absolutely intact. Higher lows and higher highs, that's what we're looking for. So it's not the end of the world on the weekly chart by any means. It is the end of the world on the short-term daily chart if you are bullish. Now, this could be a nice bullish entry opportunity as we have seen every dump in the past 2 years, and we've seen some very big ones. Anybody buying into that fear made big gains. Big dump, August 2014, huge rally. Big dump, August 2015, huge rally. Big dump, start 2016, huge rally. Big dump on Brexit, huge rally. You get the idea. So I'm no longer going to be saying bulls in full control on these videos because they are not. The bears are in full control. But longer term, it's all about your perspective. If you're looking short term, you're looking bearish. If you're looking longer term, you're scouting, you're writing your shopping list of the bull long-term names that you want to get in on this pullback. So in terms of a bounce for a potential bearish entry opportunity, if you're not in bearish yet, we can be scouting the lower Bollinger Band resistance as the first level that the SPY bulls are going to have trouble with on the daily time frame. So on Monday, we need to update that level and watch at what price it's going to be at. And that's going to be a key level for the bulls to get above in order to see any kind of bounce play out. So again, low of the day, very bearish. What stood out? And I said it all last week, 5-minute chart, 20 period, moving average, resistance. Let's zoom out and include pre-market. 20 period rejecting the price time and time again. We open bearish, one attempt. We reject from it. Bearish, 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 bearish. We struggle with it here again. We did gain it for one candlestick today. I cannot remember the last time that we only had the 20-period moving average on the 5-minute as support for one candlestick, but that's what we have today before another end-of-the-day dump on huge volume. So if you were using this 20-period moving average as your guideline, you never flipped to bullish, and if you did it here at the end of the day, and then your stop loss would have been with the new low of the day break, so not a huge loss to the downside there, limiting your risk. But very clearly, the bears had control the entire day, and that was shown, number one, on volume, and number two, by that 20 period staying resistance. So tomorrow, or make that Monday, is going to be extremely interesting. I'm going to be pumping out videos all weekend, doing all the individual names, the volatility sector, biotechs, you name it. So make sure and check those out. But Monday, whether we gap down or not, is going to be very telling, and we're going to have to keep an eye on that hourly RSI. Cannot remember the last time SPY hourly RSI was at 6. So hopefully stop losses were in place, and you did some limiting of your risk, and if you're in long positions, maybe some hedging. But bears are in control, and we might not be out of the woods yet for the bulls. This could go into next week as well, due to the fact that we have no lower wick on the daily candlestick. So I appreciate you watching. Wish you the best and a happy weekend. Come learn technical analysis.